You know, I'm just gonna draw out these little, you know, just try to draw this out. Just to train your eye a little bit. So you see these short term highs that I had drew out.
Hmm.
You know, like say, let me show you this. You know, money sits above highs and below lows. So say this is like
This
a
like
double
supply.
top pattern. Yeah, uh-huh. So you know, like how this how like the 90% of look at the chart. So if they see like price a sell off, they wait for it to come back up, but then they'll sell it again. So say that you sold right here at this high. Was it what would they put? What would you put your stop loss if you were selling right here? What would you put your stop loss right above this line, wouldn't it, to protect your position if you had a direction wrong? That's what everybody else in the world doing. They selling up here, and they stop loss is above this black line. They expecting the price to go down. So we call that, you know, it's a bunch of liquidity sitting above these highs. Same thing for right here. This is how retail traders look at it. They see price sell off again. Okay, they going all in. Every time they touch that line, they selling. It's like a pocket of money sitting above this black line.
That's what they be called. I be trading with people who like really deep into it. That's a liquidity grab, and I don't know nothing about it, but that's what that is. Ain't
Yeah, I'm gonna show you that. Now this just a bunch of liquidity. Now now you said liquidity grab. A liquidity grab, all that is manipulation. Like you'll see price just it'll just buy up, it'll reach up above these highs. Remember I was talking about all them stop losses.
it? Yeah.
A candlestick will just buy up, you know, take these people out the market.
And then 2, 3 seconds later, it's right back down.
Yeah, it's like a fake out,
Right.
and then it's gonna go the other way. These big players, these whales, these institutions, they have to make the market. I know you be hearing people say that they be making the market. They know you selling at these highs. They gonna buy up, take you out the market, and then take the trade into the intended direction. These people right here, they had a direction right, for sales, but they weren't patient enough to wait for the big player to get in. You get what I'm saying? Then I'm gonna show you that. I'm gonna show you that gap. So buy price up, hit your stop losses. They spit in your face. They say F you. They're gonna take your liquidity. They're gonna buy a Rolls Royce. They're gonna take price the other way. This that proof that big money got behind the move. You see how aggressive that camera just slammed down?
Hmm.
All right. So you see how aggressive price has slammed down? You see this little short term low right here?
Right.
Price to the right. You want to see a candlestick? You see how bold this is?
Like the
You want to
strength
see?
of it.
Hmm.
You saying like talking about how like the strength of that counter basically.
Oh damn! I just messed it up. Damn, I messed it up. Uh, yeah, this one right here. You see how aggressive that push down and it close?
Yeah.
You want to see, so this the first step, like how we look at it. You want to see manipulation happen. So this is like retail, consolidation. Prices going sideways, doing nothing. Then all of a sudden, prices buys up. That's the first step, manipulation. The second step you want to see is a market structure shift. That's your indication that the trend is finna change. So once price slam down and break close below a short term low, you gotta ask yourself, did price leave a gap? You say aggressive that slam down.
Right.
So you know what a gap is?
Yeah.
All the gap is, or imbalance, or fair value gap, all that is a one-sided market. This was just all sales, no buys. It's like a big player. They press and sell. You see how the market just sold off and then it closed.
Right.
That's all the gap is. It's a one-sided market. Because each candlestick need to get traded into fairly. Like like the market, the algorithm, they have to offer buyers and sellers into the market. Let me show you this right here. You see where it says field retracement?
Yeah.
All it is, you know, it's a measurement tool. You see where it says 0.5?
Hmm.
That's the middle of the range. If we was to, from swing low to swing high, this would be the middle of the range. You don't want to trade at the middle of the range. You wanna buy below 50%. That's at a discount. Discount.
Right.
And if price is above 50%, we consider that a premium market. Like we're looking for a sale setup. And I say this is, came from a discount down here. Price went all the way up to a premium. So if price is in a premium, we're looking for a sale setup. And then this is what you want to see happening. You want to see price going sideways. You want to see price, taking out, grabbing liquidity. That's stop hunt. And
Okay.
then what's the second step? You're looking for a market structure shift. You want to see price slam down and close below a short term low. And then on this little leg, when price broke structure, did it leave a good extra? Did price leave a gap? I'm gonna show you a bunch of examples. I'm just drawing it out, but we finna get to the the candlesticks.
Okay.
Just to just to draw it out so you can see it a little bit. So boom, that's how the gap. That's how we'll do it. Let me just show you, like, put some wicks on here so you can see how you need to draw it like that. Boom. Okay, boom. So that's the gap. So so once price slam down and it close, so the next candlestick. So when the next candlestick open up, they should offer buyers inside this red candlestick. You get what I'm saying? Because each candlestick need to get traded into fairly. So when the next candlestick open up, it should offer buyers. So boom, as soon as they offer buyers into this candlestick, if price is in a premium, boom. As soon as it trade up into that blue area, you can enter anywhere in this blue area, but your protective stop loss got to be above the high. So boom, you put your stop loss right here, right above that green candle. So if price is in a premium, we take profit at a discount, meaning at a cheap price. So boom. So say we got our entry right there. It traded into that gap. So I'm just draw it out like risk to reward wise. Boom, entry right there. Your stop loss is right above the high. So say we risking $30. So if price is at a premium, let me show you this. Say the market is trending, making higher highs and higher lows.
Okay.
If price is in a premium, you remember when I was talking about money sits above highs and below lows?
Hmm.
See these short term lows, these higher lows when prices created when it was going up.
Right.
You remember how I was talking about how money sits above highs?
Yeah.
Like so say price was at a discount down here. We went from it. Let me draw a fib out so you can see. Let me try to clean this up. I don't need you to go blind. Let me try to clean this up a little bit. Keep it clean. So always use this fib. It's gonna tell you where you at on the chart. That's very important. That's key. If you know where you at on the chart, you know what button to be pressing. So if price is at this discount low down here, so it's like where we came from, where we stopped at. Price went all the way up to here. Boom. That's how you want to draw it. From swing low to where we stopped at.
All right, go back like 10 seconds for me.
Hmm.
Like saying, just go back on your sentences. Probably like two. Go back like two, three sentences. Just repeat what you said.
Oh, repeat it again.
Yeah.
So I'm gonna show you with the candlesticks. I was just trying to draw it out. Uh, but say price, you see this where I got this green box at this low.
Right.
This
Okay.
was like this lowest point before price start going up, making higher highs and higher lows.
Mhm.
So you want to draw your field from that swing low to where price had stopped it. So boom, price stopped right here.
Okay.
So if price is at a discount, this is the whole discount area. Anything below 50%, because this the middle of the range, right? You see that 0.5.
Hmm.
This is the middle of the range. With this solid black line at, you don't want to trade at the middle of the range. You want to buy below. See where I got this green box? You want to buy below the 50%, because
Okay.
that's discount prices. And you see how prices are making higher highs and higher lows, kept going up. It's trending.
Hmm.
But once price break above that 50%, the middle of the range, we consider that a premium market. Like price is expensive right now. If price is expensive, it should drop down to a discount, to a discount price, to a cheaper price. You know how they be like buy low and sell high?
Right.
That's the same thing we were saying discount and premium. When we say discount, that means you want to look for a buy setup on the smaller time frame,
Okay.
vice versa. So
A
when
buy,
price break,
a buy is going up and a sell is going down. Right.
yeah, uh-huh.
All right. I'm just trying.
That's all we're just saying. It's just like another way of saying buy or sell, premium, discount.
Okay. No, I was just trying
Buy
to
setup.
relate it
Hmm.
to what I was just trying to relate it to what I'm doing. Because in my world, that shit calls and puts. It just calls and puts. So calls is um buys and puts is sales.
Okay. So boom, you can look at it like that. If price is at a discount, I'm looking for calls. When price start breaking above that 50%, prices getting expensive now. You
Right.
know, we don't look for buys when prices in a premium. We look to take the market down to a cheaper price.
Okay.
That's how the algorithm is moving. It's going from a discount market up to a premium market, and it's gonna go back down to a discount market. It's gonna go back up from discount back up to a premium, and then it's gonna go from a premium back down to a discount.
Okay.
Now let's go to the live chart. Are you understanding that?
Yeah.
You can ask some questions.
Okay.
You said SPX. Just to train your eye, I'm just gonna show you where the money's at. It don't matter what time frame, it's all the same. I'm just gonna shoot we go to the data. Let me just show you. Let me take this off too. Let me just show you. You see these highs? Remember I was talking about what sits above highs?
Yeah.
Money. What sits below lows? See these little wicks? Stop losses. It's just a bunch of money. It's, just to train your eye. Where the money at? When every time you come to the chart, you gotta ask yourself, where the money at? Money sits, above highs and below lows. And then just look at this. Price went up, it slammed all the way down. What did it do? It took out this lower here, took these people's stop losses. What did the price do here? So it's like premium prices at a high right here, right?
Right.
It went all the way down to a what? To a discount price. It went from being expensive to being cheap. Then it went from being cheap to being expensive. You get what I'm saying?
Hmm.
You get what I'm saying with that?
Yeah, I do. My fault. Let me cut this shit off.
So when prices at a discount, it doesn't tend to stay at these levels very long. And then you see how prices ran up, making higher highs and higher lows. It's gonna try its best to get away from these cheap prices. And you remember how? Let me show you this. Remember those one-sided markets?
Right.
Price opened up, it slammed down aggressively, and it closed. I'm zooming in so you can see it. We call that a one-sided market. That's a gap or imbalance in price. Because each candlestick need to get traded into fairly. Like the market should offer buyers and sellers. They all coming in the market. So you see how prices, going up and down.
Right.
Each candlestick getting traded into fairly, but right here it just slipped down and it closed. So the next candle to the right of that, they should offer buyers. See this little black line I'm drawing up, like a little wick.
You're right.
They should offer buyers until this candlestick to our left. Just like how all these been traded into fairly, but right here just it opened, it slammed down and it closed. So
You're
this
right.
one it should offer buyers, but it didn't. So you see that little blue area, it's still open.
Right.
No buyers. Huh.
That just show continuation, basically.
Yeah. Uh huh. So the algorithm it doesn't like these one-sided markets, so they gonna come and you know rebalance those areas. What I mean by that is that they gonna fill them in the future. It's like wind though.
Yeah.
So you can just when prices breaking down like that, you can draw it out because eventually once big money they get satisfied. So say big money they sold up here. Once they satisfied, taking profit, they gonna they gonna buy down here, and they gonna take price the other way. You see how and where did they go? You gotta look left. You gotta look left to get right. It's like we predicting the future,
Right.
and then you see how they offer. Eventually they brought price back up to filling these three blue areas, and they took out this high right here because money sits below lows and above highs. So if prices at a premium and it drops down to a discount, when price get back to a discount, it's gonna go back up to a premium, and it's gonna start attacking these highs.
Right.
That's all price is doing. Is going from premium to discount, and in between premium and discount, being from being expensive or cheap, it's filling in gaps. That's all it's doing. That's all it's doing. And I can show you all these setups. It's like, you know, we play ping pong. What I mean by that is, we'll sell it up here on the smaller time frame. We'll buy it down here on the smaller time frame.
Right.
We'll sell it up here on a on the smaller time frame. We'll buy it down here on the smaller time frame. We'll sell. We're going back and forth. It's like you want to follow it. You get what I'm saying?
Right.
So if price is in a premium, it should go down to a discount price. Prices start attacking the lows where the money is. So if price is expensive, see how these lows it was making where the money is. So it's like you want to draw it up. It's like big money. It's like they wipe the board. So say they bought down here. Once they take price up to a higher price and they start taking profit, they're gonna take they're gonna take price back down to a cheaper price and take all these people that was trying to follow them. You get what I'm saying?
Uh huh.
So it's like they wipe the board. They buy it up just to sell it back down, just taking everybody money away if they're not taking profit.
Oh, I need you to show me something.
What you say?
I need you to show me something. Go to your 15-minute time frame, and let's go to Wednesday at about 10. Let's go to like 10 o'clock. And just for me, you could take it off as soon as you're done. Could you go to indicators for me and just add this one script, and then you can delete it as soon as you're done.
Okay. So you said 10 o'clock.
Yeah, it's gonna be a little easier for me to see it once you put that indicator on it. Go to community scripts. Type in Strat Assistant. STRAT
Oh, say that again. You said ST.
RAT. uh, space assistant. Yeah, there you go, right there. Strat assistant. Yeah, the first. Yeah, that one right there. Okay.
Okay. We'll
Um,
just click on it.
okay.
Oh,
I can see the numbers now. Okay. So at 10 o'clock, um, 10. Okay, round. Okay, let's see. I think that 212 right there. Okay,
oh yeah, I got it highlight.
11. Let's go to 11 o'clock. Okay, boom, right here. Eddie, uh, can you see my mouse on your screen?
Oh no, I'm still sharing my screen.
Oh no, yeah, I want to see your screen, but I'm saying 212. What time this was? Right there. Okay, there you go. There you go. Come over a little bit. You code three counters over there. One, that inside counter right there. Damn. Hold on.
I'm zooming in some more.
Who's
Oh,
at 40? This was at 41:30 Wednesday. Wednesday at 40:30.
on the 1 hour. What time frame you
15.
said?
Oh yeah, yeah, no, that's why I look like that. 15, 15. My
Oh,
bad.
okay.
Okay. Now go to like 11 o'clock our time, just about. So Wednesday on the left or the right?
Yeah, right here. Where this black line at?
Oh, okay.
Where you said, yeah, I got
Right
it.
here. Okay. You see that one? That's what I was saying about that one. So basically, I was just sitting watching my chart. I can look to the left and see all the levels I need. You get what I'm saying? So I'm watching my chart at this one right after your black line, at that one candle. I'm stalking my chart. I don't know if it's gonna be buy or sell, but once it choose a side, I'm gonna take my entry. So I took my entry right. I think this the day I sent you the screenshot. I took my entry at the bottom of the next. Um, basically when this red candle was at the bottom of the yellow, the green wick part, like at the bottom, yeah, right there. That was my entry. The bottom right there. That was my entry. So I caught this was a 15 minute. I caught these three candles, but that was yeah, I caught them three candles, but I missed the big one.
So
But
you remember how we was talking about with that premium and discount?
right,
This is kind of like in the middle, like you
right.
want to sell at a higher premium.
Now that was that ain't yesterday. No, that was that morning. I see. I see. Okay.
So you enter that trade around
Yep.
11 o'clock. Now the big move. Now we look to enter trades right at around 8:30. That's where the big moves happen around New York session.
Yeah, that's what I'm. That's basically what I'm trading, cause it's from 8:30 to 3. So I kind of. But what I've been avoiding the open because I've been getting smoked in the open, but I can make money at 10 and in between 10 and 2 o'clock. I
Yeah,
make the most money, but I don't really make a lot of money in the morning.
we don't. Yeah, I don't. Yeah, I prefer to trade after 8:30 because that algorithm, when it opens up, it's seeking for liquidity at the gate.
Uh-huh. Yeah, I just let it do. I just let it do its. I let three, four candles pop up so I can see what's kind of going on for the day. Like,
And then I'm gonna show it to you since we
but
right
what
here.
I was saying, but I was showing you this because as soon as I got out of this trade, I could have bought buys. Like, I bought a sale right there, and shit, them three candles right there made me 2,000. But I missed the big candle. Like,
It's about this one.
yes, I missed that one. And then as soon as I got out, shit, I could have bought calls or buys and rolled it up $20.
Oh yeah, but look at it. Purse is expensive. It broke all the way down. What did it do? It dropped all the way down to a what? To a
It,
discount then. So So if price is at a premium, we take profit at a discount, meaning the lows to the left. So look at this. See all these lows? All these people over here, they winning.
Right.
They better take profit because big money gonna take the trade the other way. And look at that. You see how it took it all the way down? Because 90% of people don't know where to get out the market at.
No.
So it's like they better take profit because they coming back down to your stop loss.
But okay, so like keep with that being said, I took profits because if you could draw a line from the third red two after the one to this like this skinny looking two back behind the black line, right? Yeah, right there. That was my that was kind of my target in my head. So once I hit that target, I was like, okay, I'm satisfied. You get what I'm saying? So
Okay.
that was a good target for this candle, but the next candle 15 minutes later is what took out the because basically when I got out the trade, it started going back up. You get what I'm saying?
Oh yeah. You
Like
want to
that
know?
that
You
big
know why it went back up?
what
Because prices at a discount.
yeah.
That's how the algorithm move is going from being expensive to being cheap.
Right.
Expensive. So you want to if prices in a premium, you want to try to get up over here right after 8:30 on the small. Let me show it to you since we right here. And this happens every single day. It don't matter whatever asset class you trading.
Yeah. See now in the morning, what throw me off in the morning times is say okay, like you know how SPH moves. Say we close at 40:30 something, right? 41:30 something. And then the morning when the morning session start, the next candle be so far away from the previous candles. It's like I just wait. I don't know if you get what I'm saying. Like say if you scroll to the next day, but the candle start $20 or $30 up.
Oh, like it just gap up or something like that.
Like okay, like say if this black line was the difference in between today and tomorrow, or like today and yesterday.
Yeah.
Imagine like the beginning of the chart starting where it say 0.8%, like zero, like where your numbers at the top. Like,
Yeah.
like imagine if well your pointer that is my pointer. You get what I'm saying? Like if the
Yeah. I
counter
see
at
it.
the bottom of the chart and then the new counter for the day start all the way at the top, that kind of throw me off.
Oh, okay. Talking about on a smaller time frame
No,
or
definitely no. It'll be like go to go back to the 30 minute or something because you can be able to see the difference in between each day. Okay. Um, Damn, you ain't got the session breaks on yours. See, mine show me every day. Okay, can I let me share my screen for 5 seconds.
all right.
The wrong one again. How you
Oh, straight at the bottom. Yeah. Right there. Go to the left one more time, two more times. Right there. You see the little share button?
uh, say stop screen sharing? Damn, I'm gonna just put it over here. It won't let me show you my chart. You can't see my chart, can it?
I don't see you sharing.
It's
Oh,
just
it's a tank screen. Uh.
it's sharing the Jetsy screen. Jetsy screen.
Okay. Yeah. Uh huh. And then just go to your yeah, pull your chart up. Yeah. There you go.
Okay. All right. So okay, here go a difference right here. So this was Thursday, May 4th. But on the May 5th, you see how it's just a gap?
Yeah. Uh huh.
That kind of throw me off sometimes. Like if it's a new day. Cause I'm doing it day by day. So like it be kinda you just have to find it. But it don't be like that every day, but it just be like it go a day like you just the next day we was up and then it gapped down overnight. You can't see that, but the difference in between that shit probably like $20 or $30. 37 to 25. That's like $12. But let me just be like, that's a good one though. From 40.73, and then the next day we open at 40.95. So that $20 overnight, you don't you don't see nothing. But that's just on an hour. It look even better right here. On the 30 minute, we closed at on Friday, May 5th, we closed at 40.62, and then the next day we opened at 40.95. So going into that day, I wouldn't trade until I seen a one for real. It just be like, damn, what's really going on right here? Like all this the money, right? This would be the money if we was looking at it. It'll
Yeah.
be
So yeah, if you was trying to buy this low down here, you would target those highs.
right. I know when I got that shit just look too big. Now when I make the counters big, it look better.
Oh, so you use SM, you trade this SPX or
Yeah, this what I be. This the chart I look at.
oh no, I'm talking about like what on Trading View or you
This trading view.
okay.
This trading view. I just got that black background so I can see them numbers better.
Oh, okay, okay.
And I got the sessions break. So basically, these ain't nothing but it's 16 counters, but so there ain't nothing but a day in between each white box. Like, so this would be Monday, this Tuesday, Wednesday. You get what I'm saying?
Oh yeah.
But I don't really need a whole lot of indicators on to the one, two, and three. But I just want to be able to pinpoint stuff. Like I can see it, like just with the 2-1-2 and 3-2-2 pattern. Like what you were saying is what you were saying, what you damn, you said one sided. So in my world, a one sided would be continuation. So they're just telling you it's the price continuing to go that way. Like that's why when it's one sided, it's continuing just 2-2-2 whichever way. But I know you don't know what that shit is, but if you did, just be like damn. But we back to your screen. But I was just trying to show you. I was really trying to ask you about whatever day this was. This shit say when. Here you go right here. This day right here. You said I got in the middle because this is the open. This is Wednesday right here. So this Wednesday open, and like I said, I let an hour or two go by before I came and traded this day. But this one candle just showed me like even though this was in the middle, it just presented another entry because that one was with for the first time the whole day it was choppy. You get what I'm saying?
Yeah.
So we broke out of the chop. I knew we was break. Basically, the ones break out of the chop. So that one it gave another entry, which was good, but you would have had to get out. But that would have been good. But I'm saying, man, I'm talking about this. This a 15-minute chart. So, and from 12:15 to 1:30, we was at 4100. We went on $30. $5 be 5 grand. So they like, I gotta start catching this stuff, man.
Yeah. Yeah. You're talking to the right person. But that's very important. You want to sell at a higher premium at eight, after 8:30. But you want to see. I'm gonna show you a bunch of examples on how to to get in. For, like the sell, the buy, the sell, the buy. We just following the algorithm. We taking it, back and forth.
All right, let me see. Okay.
Let me show you a bunch of examples.
All right, I'm back on your screen.
So still recording. Uh, so boom. So you said we was right here. Let me show you this. Time frame was that.
I don't think it's sharing your right now.
So you saying so we prices right here.
Right.
So price. So this how you do it. So see how prices went sideways right here.
Mhm.
Prices at a discount. It went all the way up to a what? So you could just eyeball it. But if you can't for the untrained eye, it's like where do we come from? Where did price stop at? Price came from a discount market, cheap price. It went all the way up to a premium market. Anything below 50%, we looking for a buy on a smaller time frame. But once price break above that 50% line, you should be not trying to buy. You should be looking for sales now. You get what I'm saying?
Yeah.
That's the whole premium area. So if price is expensive, you should be looking for sales on a smaller time frame. Even though we on the 5 minute, so they're just gonna play it out. So you see that price is going sideways, and then it reach up. See, it's like stop losses sit above these highs. Stop losses sit above that line, and you see this one candle just reach up, big money they'll buy up, take you out out your position. So that we call that a run on stops. A stop run. This is manipulation. Just because it ran out that high to our left, you gotta look left to get right. So that's the first step, manipulation. The second step, you want to see a market structure shift. Go to your line chart. You see this little short term low.
Mhm.
Price to the right closed below this little short term low right here. That little black line. So boom, that's the second step. Now you got an extra step. The price leave a gap. The 1 minute. Let me see what the 1 minute look like. See, I like the 5 minute. So boom, from here to here, got a small little gap right here. You see this little blue area? See that little blue area right there? So
Yeah.
when the next candlestick open up, they should offer buyers until this red candlestick. So boom, soon as price trade into that little blue area, into
Mhm.
that gap, now you want to play. Why are we looking to sell? Because price is in a premium, price is expensive. So boom, entry here. So I'll show you the risk reward. You want to put your stop loss right above this candle, that green candle that bought up and ran out these highs to our left.
Right.
So those people right there, they mad. They blew their account. So they had the direction right, but they weren't patient enough for to wait for big money to get in, because big money, these banks, these institutions, they got to make the market. So they bought up just to sell it down, take you out. They spit in your face. So stop run, market structure shift. Go to your line chart for the untrained eye. That show signal that the trend is finna change. Once price to the right, close below this black line, close below a low. And then you got to exercise the price leave a gap. It was right here from week to week. Let me take this off. From week to week, from this week to the left. So this is where price closed at right here. That's how you want to draw it. It's like week to week or where it closed at. So the next candlestick to the right, they should offer buyers until this red candlestick. It's a
Okay.
small little gap. There was no buyers offered in this little area. So boom, as soon as it does that, price can trade anywhere in this blue area, but your stop loss got to be above the high. So boom, entry here, boom, sniper entry right there. Put your stop loss right above the high. So you see where it says 24. That's how much we're risking on this trade. We're risking $24. or whatever, what you're risking. If prices at a premium, look left to get right. Where the money is.
Right.
Where the money is. You zoom it out. That's your target. You targeting, God dang, you targeting all the retail traders stop losses. And you remember, those gaps. Do you see some gaps?
Yeah.
See that right there? That's a one-sided market. They're just all buys, no sales. Because the candlestick to the right, they didn't offer no buyer. I mean, no sellers until this candlestick to our left. You see that?
Right.
No sellers. It just closed right here. Same thing right here. That's a gap from week to week. The wick from the left and the wick. Let me zoom in so you can see it good. Wick to this left and wick to the right. The candlestick to the right, they should offer sellers to this candlestick. They didn't, just a little bit. So you want to draw it from week to week. No sales were offered here. No sales were offered here. So those two areas are open. Those who take profit areas. So sniper entry right here. What's the risk to reward? You see where it says 6.33?
Hmm.
You risking 1% of your account, or whatever you're risking to gain. See where it says 152, 152 points. That's a nice move.
Yeah.
That can be a big day if it's going your way. So if price is in a premium, it should go down to a cheaper price. And I say that price, it kept making higher highs and higher lows. And you lose this trade. Okay, no worries. Losses are a part of the game. But if you lose this trade, all price is doing, if price is in a premium right now, it's gonna go up to a higher premium. It's gonna get even more expensive. You want to see this same thing happening. Price going sideways. You want to see manipulation happen. That's the first step. Then you want to see a break of structure, and then the price leave a gap on this leg. When price trade back up into it, you take it back down to a discount. That's all we're doing. As soon as it come back to that gap, boom, get your entry, and you take it on down. Look left to get right. What gaps need to get filled, and what lows need to get ran. That's if it prices in the premium.
Okay.
You get what I'm saying?
Yeah, I can see them gaps for real. No, I ain't never looked at it. It ain't never been that clear. Like from week to body or week to week, like I see it.
And yeah, they be real clean. And wait, let me get in on this trade. Get in on this. Say we dropped 5 contracts, so we sold it. So we got dropped 10. See that?
Yeah.
You can put your stop loss right above that little wick of that green candle, or at the close of that green candle,
Right.
whatever you prefer. So boom, you see that sniper entry right there? A
Yeah.
little bit of drawdown. Trust the setup. If price is in a premium, it should go down to a cheaper price. You know, that's where the entry should have been. And then boom, look left. Look left. They offer sellers into this area, this candlestick right here. Boom, price still going down. What is reaching for now? Let's get right here. Where the money at? Price is driven to these areas.
That shit's so crazy.
And now you can take profit as you please now. If you know, it filled in this gap, it did trade into this one.
Right. And then look
About
at
halfway.
damn, this the play I was telling you I messed up, ain't it?
Yeah, but you had sold it like down here,
No, I
somewhere
I
down here.
sold on this candle, this the reversal right here.
I think you said 11 o'clock.
Oh, this a little early. Oh, this was that open. This was that open.
Yeah, this was the at the 8:30 open.
I see it. I see it. I see it.
Yeah, the big moves happen around. You want to trade after 8:30. That's what that big sale had happened. Yeah.
Yeah, the bell ring at 8:30, but they be going crazy at 8:30.
Oh yeah. Seeking for that liquidity. Now if price dropped down like this and they gave you was up 4 or 5 thousand, ain't nothing wrong with taking partials or taking half of your contract,
Yeah,
half of your
but
position
you
up. Taking
be having to lead them runners, bro. Like if I got 10 contracts or if I got 7 contracts, I need to be selling 4 and even 3 or
Oh yeah. I'm gonna show you how to manage them. Like, so say boom, you got your sniper entry right here. You got your stop loss way up here. As it's going, like it went down, like right here, it's just gonna break it down like that. You can trail it. Boom, go break even or take 5 contracts off of, trail it. You can have put 5 contracts on your for the SL. As you trailing it, if price come back up and hit it out, you done secured, a couple racks on that trade. So
right,
you don't have nothing to worry about. You didn't already paid yourself for finding a good setup like this. You get what I'm saying?
right.
That's how you know you can never lose a trade taking partials. Now this that trade I had took Wednesday, but it was on the YM. This the trade I had took, but I was on the 30 seconds, and then it sold off like this, and that's how I did it. Like I was just showing you, I had my stop loss like right, my SL like right here. Boom, it hit me out right here. I'm good.
Right.
My entry was way up here. I got nothing to worry
Right.
about if it
So when I
retraced like
be
this.
trade, okay, so in a live setting, if you put your cursor at the break, go to the reversal, like at the
To
end,
my right here.
right there. Okay, so at the break of that top of that red wick right there, I would have been getting completely out of my position. Well, that would have been great though. But that
Yeah, that's
also it's a buy sit up right there too. At the same moment you getting out. If you didn't have a trade, you could buy right there and catch them 2 candles. I'm just saying these 2 targets, like 2 red candles, they finna get took right back out, and which they did.
yeah. And you see how the YM didn't do this though. You see, price slammed down. It left a gap right here.
That's the gap you marked out right there. I see. Okay, I see
Yeah.
that. Yeah.
Price is driven to these areas. These one-sided markets. They like to offer the market fairly on both sides. You
Mhm.
see how when price broke down, it filled this one in.
That one.
This one about halfway. But when it's breaking down, so it's like, yeah, you got to take partials because it's gonna come back up and fill in these areas, these open candlesticks. You get what I'm saying? These gaps. The algorithm is programmed to move like that. And then you see, boom, you could have got a re-entry right here because price came. Look,
Right.
premium, it had dropped down to a short-term discount. Then it went from a short-term discount back up to a premium market. So you could have got a re-entry right here
Right.
on that gap. We always get our entries on these gaps. Boom. So sniper entry right here. Where the money at? Like you said, right here at this low. Because there's a lot of people buying right here. Where would they put their stop loss? Right below that black line. Price is driven to these areas. It's like they big money is playing search and destroy.
Yeah.
They seeking for that liquidity.
I'm telling you, man, the S&P, it'll be up and down 30, $40 all day just to close where it open at for real.
Oh yeah.
I'm used to it though.
But like you see the order flow, filling that gap entry, price slam down. What did it leave? And left another gap here, fill both of them in, snipe it. You can play again. If price come back up to a premium, then look, price slipped again, trade into that gap, it's starting to break down.
Right.
It's driven to these areas. Look at that. Boom. Shoot right through that little gap. Run
Yeah.
out them lows. So you see where price came from? Price premium. That's that premium area. It sold all the way up to a discount.
Yep.
And we swept these lows to our left.
Now we right back at them lows.
Yeah. So now it's like, you want to follow it. So if price is at a discount, you should be looking for a buy setup now. So it's like, so it's like, so let's close this position. Boom. That's a nice lead. You know, look for you're at 14 reps. That's a nice move. You could be done for the month.
Hmm.
So it's like see what it says field retracement. So you want to draw your field. It's like, where do we come from? We came from a premium market. We dropped all the way down to a what? To a discount market.
Okay.
See how we below 50%? So this is your focus down here where prices are currently at, this discount low.
Right.
You know,
Base.
this how
I can
huh?
draw this. Did that field retracement that you drawing, and with that 50%, I could draw that on top of my 30-minute chart every day if I have to.
Yeah, you can't, but you got to keep in mind of the higher time frame, because every time frame has its
Right.
own market
Like
structure.
I get you right. I might have to draw it on the hour, or it might be a daily chart. But I'm just saying, like, I get what you're saying. Like how to apply it. Like,
Now that's gonna take a little practice, uh, with that fib on, all the time frames. But if it's clean like this, you can just look at it with your eye. Prices at a high, drop down to a cheaper price.
okay.
You know how they be like buy low and sell high?
Hmm.
Well, this how the 90% will look at it. They buying up here. They didn't miss this move right here from this low.
Hmm.
They buying up here. They woke up late. That was their excuse. They
Right.
buying up here. You want to buy low, you want to sell high. Nah, same thing. Retail traders, shoot, they missed the sale. Guess what they selling at? Now here at this low, at this discount low. You wanna sell high. You wanna buy low. Don't do what the 90% do.
Hmm.
They don't know where to get in. They don't know where to take profit at. So it's like don't want to trade like them.
No.
So if prices at a discount, you gotta find it. You gotta find it. You gotta cycle through your time frames. You gotta find it. You want to see a stop run like the same setup. Let me take this off. Like the same setup you saw at that high. What we was at? I can show you a bunch of them because it is going back and forth. What was that? Yeah,
You
5 minutes.
know what time of the day that was? It was
So boom, right here, right here. So premium, it dropped down to a discount right here. It bought up, came back to that gap right here, and then just sold up. You play it right here. I think you played it right here. Then price dropped all the way down again to a deeper discount. So it's like you still looking for buys. Like if you tried to buy right here and it went up and you didn't take profit and then it came and hit your stop loss, no worries. All price did was drop down to a deeper discount. So now you got to find it. The price is at a discount. I can see the entry right here just by looking at it. See, look at this. You want to see stocks being ran? I can just see it. Big money they sold down. Price dip around this little week right here, this low. What's the second step? So manipulation right here. The second step, you want to see a market structure shift. You see this little short term high right here.
right.
Price to the right closed above it. Not no little wick. You want to see the body close. You want to see the body close. Close above the short term high. Go to your line chart for the untrained eye. Now you got an extra set. The price leave a gap. Do you see a gap?
Hmm.
Boom, right here. Right here. Because each candlestick need to get traded into fairly. So let me just do it so you can see. So soon as the counter closed like that, okay, boom, you sitting on your hands, you waiting for this counter to get traded into fairly. So soon as they offer some kind of sellers into that candlestick, you can play prices at a if prices at a discount. So boom, say we bought it. Boom, you want to buy right here. Sniper entry right here.
Kind of like on a pullback almost.
Yeah, on that gap though. When it pull
Right.
back on that gap, that's where you want to get your entry at. Stop loss right below this little counter right here, that red one. The counter that did it, it stopped people out.
And then all your targets right here to the left.
Yep. Look left to get right. So we risking $28. Look left, what areas and price need to get filled in? Even though we got an entry right here. What is this right here? Just to train your eye. What is that right there? Got that gap right there. Where the money at? If price is at a discount, it should go up to a expensive to a higher price. So here, where the money at? See these little weeks, these short term highs? They gonna come back and get. So it's like they design these little short term highs. They gonna come back and get that later. You know what I'm saying? Once they
Right.
finish taking enough profit, when they selling it down. Once they satisfied with their profit, they gonna take the trade the other way. Big money is. So it's like TP1, TP2, and it's like our previous entries over here
Mhm.
are now our targets now.
Yeah.
Because
It,
it's like it's like big money. They wipe the board. They gonna sell
yeah.
it down just to
It
buy it
be,
back
it
up.
be like that. Like your old entry be your target. Sometimes I draw lines. It might be a take profit level, but it's gonna be the new entry, like the next day. Like, you know, uh,
And
all right, so, all right,
hmm,
I'm with you. I'm with you. I'm with you. But walk me through the steps again. So we looking for the first step. The first thing we looking for is where the money is, and then we gonna find the manipulation, and then we looking for the structure to change. Right?
yeah,
Okay. I'm just trying to make sure I'm right.
every single time. The same thing that you saw at the high up here, it's the same setup. When price was very expensive up there, you see that green counter reach above that high to your left.
Right.
Some kind of high need to get taken out first. That's the first step. The second step, you want to see that market structure, that shift in shift in structure, and then the third step, the price leave a gap. If it did, when the next candlestick trade into it, now you want to get your entry. Same thing for the low. It's the same setup. The premium to discount. It's the same setup. Stop run, market structure shift, boom. Price to the right, close above that black line. You want to see this. You want to see the lowest one being broken, the lowest short term high being broken, and then on this little leg right here, the price leave a gap, and then when the next candlestick trade into it, now you want to play. If price is at a discount, and
Okay.
then you just take it up where the money at. Price is driven to those areas, so you get your entry right there, sniper entry right there. Trust the setup. Be patient. We know where to get in and get out the market at. We know where the money is. You know, if you take a loss, if you lose this trade, all it's doing, prices is gonna go down to a deeper discount, even more, cheaper. You want to see the same thing set up happen again, manipulation,
Right.
price going down below a low.
All
You
right.
want to see it. Hmm.
That's a. Well, I'm just looking at this as a real life example. That's a chart. In real life, I would I would know for a fact. Like we got our first target, what that is, close to like 41.37, 30, 41.40. We got our first target like right up in here. But I'll go and take profit at that red candle. Just I don't know. It be emotions or I don't know. Like it's
Oh,
like,
because you see it
but
coming down a little bit.
but I know the target. Like I be it be trades just like that. I get in, the entry be clean, and I catch a great move, and then the little pullback. Like say if I'm up 100%, I'd be up 60%, and then I take my profits, and then 2 3 minutes later, that go to target.
Now price ain't supposed to go up in a straight line like that. They
Right,
should offer each counter need to get traded into fairly.
Right.
You know, these two right here, they offer some kind of sales right here. But yeah, you're gonna have to just trust it. If prices at a discount, it's not gonna stay there at that level very long. And you see how it just ran away.
Yeah.
You gotta just trust it. Just take parcels as it's going. If you drop a 10, 5, different 5 contracts, you could take two off. You done paid yourself on this move. So if it come back down to your entry, you already made some money on that trade.
Right. And that's what
Finally.
I do a lot. Like I don't like to like go up 40 and 60% and break even and then go back up 60% and break even. Like I feel like I don't know. Like it'd be hard to watch. Like I definitely don't want to lose. I know losing part of the game, but but I definitely gonna learn some shit I can apply tomorrow for real. Like I see exactly what you're saying. Like it make more sense now.
Now this
Like
is how really
yeah,
this how price really move. It's going from expensive to being cheap, and it's just filling in gaps. That's it.
right.
That's how them big players. That's how they move in the price. But it's the same sniper entry setup for the premium discount. All you need is a 2-to-1. As soon as it hit this first TP, you could have been take half your position on. Let's say we took four contracts, four contracts out. So if you buying, you know, you want to sell back your position. So boom, see how we secured it.
Right.
So soon as it hit your first TP, boom, you can already took half. You took 90% off. You got if you're trying to leave a runner,
Mhm.
leave one contract on the table. Put it, go break even. See if you can hit your other target up here, your other TP. So you got nothing to worry about. If it come down, if price come down and hit you out with a small win, you done already secured four X on that trade. But that's gonna help with build with confidence with holding trades, doing it like this,
Okay.
taking half your position off, let one run. Trust the setup. If price is at a discount, it should go to a premium. If it doesn't, it's gonna go down to a deeper discount, and you still looking for buyers. You know what I'm saying?
Mhm.
And then boom, it hits your other target.
That's typically how it go.
So you got nothing to worry about, and you could just keep trailing it up as it goes. Every time structure making higher highs and higher lows, I go like that. When it breaks structure again, I'm gonna move it on up again. Just keep trailing it. Make sure you secure it, cause you came in this thing with nothing.
Right.
That's how I look at it. You're doing it for a good cause, so losses are a part of the game. But we're trying to be on the right side every time. We're not trying to lose. But yeah,
No, they like what I do know. When I win, I know why I won, and when I lose, I know I know why I was wrong. And it's like as soon as I'm wrong, I cut it. I don't see like, and that's you can't teach that part to people either. Like you can be wrong and just watch it and just keep watching and not pull your money out. Just keep watching it. And
oh yeah, oh yeah. Like you see this short term high.
all right, so now it'll
What's
be.
this above highs? Hmm?
I know I was just talking about that little consolidation right there. But I see the highs though. Yeah.
Price should shoot right through it because it's a lot of money above that line for the people that's selling right here. It should shoot right through it. If it doesn't, eventually I'm gonna come back and do it. But you see, like you can just look at it with your eye until you get more, used to looking at it in this way with that, discount to a, discount price. It went all the way up to a what? To a premium. You want to buy low, sell high, but you want to see the same setup at this high. Manipulation, you know, market structure shift, gap you play. Stop on shift, gap you play. So these people that's down here that's buying, they better take profit because eventually, when big money, they get ready, they're gonna take place down to a discount. Try to speed them up.
And then on the way down, them two targets you got, them gonna be your first two targets.
Talking about right below it. Oh, it done already shot right through it. I know it shot right through
Not
it.
so the $2 signs, like them gonna be your first two targets on the way down.
You said $2 signs.
No, I'm just saying like once we come down, like damn, like that's gonna be your target. Like the dollar sign with the arrow, yeah, like that's gonna be your target on the way down.
Oh, all this, we ran it right here. We ran out all this right here with this push up right here.
That'll be the green right here. Yeah, I would probably go like the big green body counter. Yeah, right there. One of them. Yeah, I would probably aim for like right in there. Right, yeah, like right in there.
Oh yeah, yeah. Where them stop where the money at here, and you gotta keep in mind this the 5 minute. Like if you go to like the 15, you should see bigger gaps and stuff like that. You know, see what the 30 minute look like. It's like you see those solid gaps on the 30 minute to the 1 hour. Like when price, sniper. Look, we was already on 1 minute, 5 minute, 1 minute entry way down here, but you can see the, you know, we always get our entries on the smaller time frame, but you can see these gaps right here on the 1 hour that need to get filled in. When price come back down here, 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 and then this one right here still open. So let's just see. And then you just see how it just shoot through that little low, shot through this little weak right here, shot through that high where the money is. So now you want to draw your field out. So it's like where we came from, where we stopped at. Let me try to keep it clean. Because price tells a story every day. It's your job to figure out where is big money gonna take it.
Right.
But you see how clean this is? You can you could tell if somebody can trade just by looking how clean their chart is. But premium to I mean discount to premium. And then look at it, that was an extra 2K right here. If you would have held it, it would have been even more, with the whole position on.
Right.
But that's an extra, you just riding that wave, trailing it as it goes. So you could just kept moving it on up, moving it on up. You could have put it right here. Your protective stop loss. You can secure it all that. You ain't got nothing to worry about. You can go close your laptop. So go hit the gym or something. Hey,
Right.
so boom, you can take what the market give you. That was a nice move from here to here. That's a nice lead. So boom. Now we getting ready for look for the sales. You want to see the same thing happening. Manipulation, market structure shift, gap you play. And if prices at a premium, it should go down to a cheaper price. And we should come back down to fill in these gaps. And look at that. See how prices is coming down?
Right.
Fill these in right here on the higher time frame, on 30-minute gaps. Yep. Sellers have an offer here, here, and here. So it's like you want to follow the algorithm. So we could have got a sale over here on the 1 minute, take it down to a discount. Let me just show you the ping pong plays, just to train you, so you can see it. So say, yeah, right here. This is the 1 minute. See these equal highs right here. See how prices this. Let me zoom in a little bit. Price reached up, grab them stop losses. That's the first. You want to see manipulation happening. Now you want to see that market structure shift. So you just, you're waiting, and then you know, it's gonna take a little time. Playing, trying to get them sniper interest like that. If you like it on the 1 minute, if you zoom down on that little area, that premium high at the top, because it's like we came from way down here. That's where we came from. So now you're trying to, when price get to a premium, like on the five, the time frame doesn't matter. You got to find that entry, just like how we found it at this discount low down here. You got to find that entry. This setup was clean on the 5 minute,
Right.
but up here you probably can't see it on the 5 minute. It might be clean on the 1 hour, 30 minute, 15, 5 or 1. You got to find it. So I like to say, you know, you got to do surgery. So you cycling through your time frames. You trying to see where can you get in if prices is in a premium. So you
Right.
zooming in on that area.
It's gonna help me out too because I'm entering most of my trades based off 30 and 15-minute time frames. But once I'm in my plays, this what you teaching me off the 1 and 5, I can gauge it a little better. Like I won't sell so early. I won't cut it so early. You know what I'm saying?
Oh yeah.
How you find that website, man?
Hmm?
How you find that website?
It's about this GC meeting.
Yeah.
Oh, a buddy of mine. Cause we was doing the Zoom. Cause when I was
Yeah.
doing it,
Keep starting over here at 20 minutes.
hmm?
Yeah, to keep starting the Zoom over here at 30 minutes.
Yeah. This unlimited. It's unlimited, but with the recording, I think it stopped at an hour
Oh,
for the stream. But yeah, this unlimited. This what we be streaming on every day. So you want to see manipulation. Now you waiting for a market structure shift, and then boom, price slip right here. Price to the right, close below this little short term low. So that's your signal. The trend is finna change, and then you got to exercise the price leave a gap. Left a little small one on that red candle right here. But yeah, that just a meaning because I didn't want to pay for that Zoom
no,
because not a lot of people take this serious like how we doing it.
no.
So I was like, sure, I'm not finna pay for if ain't nobody finna jump on. So soon as price trade into that gap, you can play. If price is in a premium, you want to see manipulation. You want to see stocks being ran first. I'm gonna text you everything what to look for. It's nothing too crazy. You want to see stocks being ran. You want to see price reaching above, short term highs or equal highs, and then you waiting for a market structure shift. So it's like price made a like this, and then price slip right here below this little low. Price, you got that breaker structure right here, and then so you're waiting for price to come back to this gap right here, and you want to take it on down to a cheaper price. What is what is this right here on this green candlestick?
On the gap.
Yep. What's this below this low here?
With
What's
that
this below these lows here?
oh money.
What about this one? Just to train your eye.
It'll just be a new. That'll be a new level, right?
What's this below this low? See how clean that is? How even it is?
Uh huh.
It's a lot of stop losses that sit below that low. A lot of money.
Yeah,
Then what is this right here? This on this green candlestick.
that's a gap.
And this is just the 1 minute. Every time frame has its own gaps,
Right.
liquidity and stuff like that. Those are targets, take profit areas. That's where you want to get out the market at.
Okay, that makes
So
sense.
so it's like we don't guess. We know where to get in the market and we know where to get out at, get out the market at. So you want to mark these areas up. These are your take profit areas. You had to have like a realistic, price level.
Hmm.
But sometimes it's not gonna come all the way down here in a day. You
Nah,
gotta have realistic take profit TP
I get what you.
like this lower here. That's reasonable because that's a lot of liquidity. That's a lot of money
Right.
just to get here. They pumping trillions of dollars into the market. So boom, if prices in the premium, we selling. Why are we selling? Price is expensive right now. So soon as you could trade anywhere in this blue area on that gap candle, on that red candle, let me zoom it in. You could trade anywhere in that on the candlestick, but your stop loss gotta be above the high.
The top of it.
Yeah, boom. So we're going short right here on that gap. You can have your stop loss right here. Whatever you good with, 15, 20, 10. Because, we're on the 1 minute. We're not risking that much.
Okay.
8 point stop loss, 8 tick. So it's like look left where the money at. What areas and price need to get filled in. Here, we got that gap. That gap you said, you can target that. But trading in this kind of way, these are some very explosive moves
Right.
like that at that low way down here. Same thing like that sell right there. You see how explosive that was?
Yeah.
Where it broke all the way down. And once it got down to a deeper discount, you see that buy right there? Very explosive to the upside. Like these are some, some very explosive trades. And all you need is, price action to price gonna tell you where it's gonna go. But we using that discounted premium to guide us on what buttons we should be pressing.
Okay.
But you see that the risk to reward on this, you're risking $8 to gain 21. That can be, two, depending on how many contracts you drop, they can be, you know, 211. They can be
Yeah.
21K,
That's one of them trades. Just catching from 41.66 to 41.62. You catch them $4. You might have a contract that costed 200. It might cost 350 off of that. So right.
Oh, yeah. And these setups. So that's the only thing you trade. All you need is one pair. So you sticking to the SPX.
SPX and buy. Can we
Okay.
look at um let's see, what day was this? Friday, May 5th.
Okay. Okay. I'm gonna show you.
That shit just went up that whole day.
See, look at that. If price is at a premium, it should go down to a cheaper price. You see how
Okay.
explosive it just ran to your TP. You could have been done for the day.
Yeah.
So boom, it's close classic trade. That's a nice. This is our target. We're not gonna get too greedy. Even though we trading in this way, we know where the money's at. Sometimes it takes a while to get down there. Sometimes it won't fill in all your targets in one day.
and trade and stuff. Yeah.
But eventually it's gonna get down now. So it's like take what it gives you. If it give you a nice leg like this, don't be greedy. Cause sometimes it will come back all the way up to your entry, and you know,
No, I ain't got coming right now.
but you see, like
I just copy.
it's still filled in that area. You see that
Yeah.
right at this low, filled in this gap. So sellers have been offered in this area. Okay, we took these people's stop losses, look left to get right.
Right.
We filled in this gap right here. So sellers have been offered here. We took this low out. So it's like they wiped the board. All we doing is just following these big players. We following their footsteps because they move in price. We can't do this. That's a lot of money. We doing this right here. You see this little consolidation.
Hmm.
That's us right there. We can't move price, but see how explosive that was. We can't do that. And you see how they just wipe the board. And look, this the 1 minute. Let me pause this. See this low down, this discount low. This where we came from on Wednesday. It went all the way up to a premium, and then it went from a premium it's trying to go down to a discount to a cheaper price. But yeah, that's how that. This is how the algorithm, how it really moves.
Yeah, I get that. Let's
What you say?
can we look at the same? Can we do the same thing? I ain't gonna hold you all day. Can we do the same thing one more time? But can we do it on a 15-minute chart?
Sure, it don't even on all the time frames. It's all the same. Price is fractal.
Yeah.
Yes, it's fractal. And you see your entry all the way up here at the top. You see what price is currently at. That's a ex, explosive move.
Yeah.
Sniper entry way up there at the top. But you see it though, like sell up here on a smaller time frame, buy down here on a smaller time frame.
Right.
Sell up here on the smaller time frame. It's dropping down. So right now, price is currently at a discount compared to where it came from. So it's like you want to follow it. You get what I'm saying? And then look at it on the 1 hour. Look left to get right. You feel that three gaps right here. These three candlesticks have been, priced in fairly on both sides. So the market made these areas efficient. So that's healthy price action. So if price go down to a discount, it should go back up to a premium, to a higher price. So it's like you want to follow it, and you can find the buy somewhere down here on the smaller time frame. Look at that. You see how it turned around and went the other way,
Right.
and then it went from a discount back up to a premium. Then it's going back and forth. So it's like you want to follow it. You see sell up here, buy down here, sell up here, buy down here on the smaller time frame. We always get our entries on the smaller time frame. What I mean by the smaller time frame, whatever the gap is the cleanest, that's the time frame you want to play. It can be on the 1 hour, 30 minute, 15, 5, or 1. It just depends on the price action. So the setup is never gonna be the same. Like like time frame wise,
Hmm.
it can be on any one of these time frames, like the 1 hour on all the way down to the seconds. But it's the same setup though. It just the whichever gap is the cleanest, that's the time frame you play on.
I get what you're saying.
Buy down here on the smaller time frame, sell up here on the smaller time frame. Buy down here on the so you following, but you see it though.
Yeah.
Discount, premium, discount. So it's like you following. That's key. Knowing where you at on the chart, that's very important. That's key. They didn't teach us that when I first was learning.
Hmm.
That's key. Let me show you
Bro,
this board here.
I appreciate everything, bro.
Oh, y'all be doing this on the weekend a lot, but check this out right here. So you see that, you know, this was a very explosive move to the downside. That was a look at it. You see that risk to reward? That was a 21 to 1. If you risk 1% of your account, you gain 21 on this trade. Boom, to the downside. Price came down to a discount. So boom, see this area down here? This your focus right here. You see it? This where we came from up here. Price is expensive up here.
Right.
So if you was to draw the field from this high, it's like where did we come from? Where we stopped at? We stopped right here. So this blue area, you wanna, remember I was talking about you wanna buy below 50%. So now you gotta find it. See this blue area? You gotta find it. 5 minute. I can't understand the price action on the 5 minute. Well, yes I can. But let me see what the 1 minute look like. So you gotta find. You gotta do surgery. You trying to see where can you get in at on this? Cause you know where you're at on the chart. Prices at a discount. So boom, just looking at this. Let me take this blue area out. So you see these lows right here? What's the first step?
Find the money.
You first step you want to see now. Let me let me show you. Let me show you this. So you see how when prices is breaking down, leaving these short term. Let me take this out. Leaving these short term highs and all this. Let me put this on here. Like you see these highs that they left, they're gonna come back and get that later. So when prices breaking down like that to a deeper discount, you can mark these levels up. Your targets, where the money is. Prices driven to these areas. So you can mark those up and the gaps that you see. When prices breaking down, you can mark these gaps up. Whatever gaps you see, those one-sided markets. It was real small, small, real small. So you drew your field where we came from, premium. We draw it down to a discount. Okay, we're looking for buys now. So boom, you can take your field out once you figure out where you at on the chart. Take your field out. See this little consolidation. All these retail traders getting trapped in this area. Now you sitting on your hands, you waiting. So once you see that, you want to see these people getting stopped out. So it's like big money. They saying if you, they saying if you, they gonna grab you, they gonna spit in your face. They taking your liquidity, and they gonna go buy a Rolls Royce or something like that, whatever car they want. So you see these lows. What's this below lows? Money. It's like a pool of money sitting right below these lows. All these people here, they buying. You know how retail traders they buy at support.
Mm-hmm.
They expecting price to go up, so they gonna drive price down, grab your liquidity,
That's
and you see how.
right there.
Yeah, right here.
Right there.
Even though this the 1 minute, this like one whole candlestick pushing down.
Yep.
So it's like look left. Okay, you
That's that,
waiting for.
that's a big on a 5 minute. It's just one big solid two.
Yeah,
Well, or it might even be a three candle for real.
yes, yeah, one solid candle. They just break it up in pieces because that was the 1 minute.
Mhm.
Even though you can see it better on the 1 minute with that whole stop on. Well, it should. Oh, it ain't a wick, but it look better on the 1 minute. So that's the 5 minute. I thought that 5 minute would have a wick. Way price did that.
Yeah.
But yeah, you see that on the 5 minute, it didn't look like it did it, but on the 1 minute, it took these lows, and this that proof. Big money got behind the move. You see how price went the other way.
Right.
That's their proof. So now, what you want to see? So that was our stop around right here. That's the first step, manipulation. The second step, you want to see a market structure shift. Go to your line chart. You want to see the lowest short-term low, short-term high being broken. See this little short-term high it made, and then price to the right, closed above it. This little black line. You want to see the lowest one being broken,
See it.
not this one right here, because you're gonna mess around and miss the entry sometimes, trying to wait for that highest one. You want to see the lowest one being broken. That's all you need. And then on this leg right here, you gotta ask yourself, did price leave a gap?
You
You
see
see it
it.
right?
The
See it
top,
right?
the top of that long red wick is your gap. I see it.
Oh, yeah. You got one right here, and you got one right here on this little green candlestick. Yeah, real small, like how you just said. Boom, right here. Cause this green candlestick right here, it didn't offer no sellers right here. It just went straight up and then it had closed. See that?
Right.
And then this candle pushed up aggressively, it closed, left another big gold gap. Gaps got to get filled in the future. So when they start offering sellers into these two candlesticks, you can get your entry, your stop loss right below this line of that red candle. Put your stop loss right below that low. So you're not risking it. Trading in this way, you're not risking that much money. You can trade anywhere in these two blue areas, but your stop loss got to be above the high. Below the low. So you sitting on your hands, you wait. You're not gonna chase it. Just because you see it going up. You're not gonna chase it because we always pull out that field to see if we're buying at a discount or selling at a premium. See that below that 50%. Two blue areas.
Right.
So this we want to buy below 50%, not at a because so say you bought right here. Now when price start breaking down, because what if it retrace on you? You're gonna be in a lot of drawdown. We don't like being in drawdown. So you want to wait for price to come down to your area. You get what I'm saying?
Mhm.
You want to buy below 50%, not up here, because look at that. You see how it dropped all the way down to our levels? You would have been mad. Okay, you know, you want to buy below 50%, not above it, because prices in the short term a little premium up here. We always buying below at that cheaper price. So I always wait for your price level, and you see, boom, you could have played down here, filled in this gap, and it came down to this one right here. Now, some of the times you're not gonna always get the best entry down here. Sometimes it'll just come to this one right here in the middle, and then it'll just take off and go. So it's best to just play this one right here. Because sometimes you're trying to be so precise, you might miss around and miss the whole move trying to get that best entry down here. That's what I try to do a lot.
Right.
It's best to just play over here because it's a gap right here too. You know,
And it's like after I miss my entry, I don't like to buy stuff. I just watch. Like I can live with just watching versus missing my entry and buying some 30 or 40% into the move.
yeah. So boom, say we bought right there. We show you the risk reward. So where the money at? We mark those levels up. If I zoom it out, boom, boom, boom. TP, gap fill. Take part. Where the money at? Here. All them highs. And this one, these right here too. This one right here. It's a lot of stop losses sit above that high. And then what is this right here?
What's it's crazy you say that. That's been a level for like 3 weeks. We go to 41.33, 41.32. That's been a level for weeks, like 2, 3 weeks in a row. Like
You said 41.32.
Yeah, 41.32, 41.33. Like we come test that level all the time.
Now we want to see it shoot right through it because it's a lot of stop losses sit above there. I don't know why I can't see the stop loss. Let me just pull it up. So that's like a 10-point stop loss. Whatever you come up with 15, but we normally just put it right below that little week. But even though, because it's the 1 minute,
Mhm.
10 ain't that much. Give it a little space, even though we try to be so precise. You want to give it just a little bit of space. So let's say 15. You see the risk to reward where it says 2%, risking 15 to gain 35. That's just the first target. But we still, if we zoom out, this the 1 minute now. We at the bottom. You know, we still got higher targets on a higher time frame. You got to keep that in mind. You can get your the sniper entry on a smaller time frame every time. And then you just trust the setup. We know where we at in the chart. Prices at a discount. It should go up to a higher premium. And I say if it doesn't, and it just keep going down, making lower highs and lower lows, you want to see this whole setup happen again. You want to see price going sideways, consolidation. You want to see manipulation. That stop run, taking out the retail traders, look left, taking out them stop losses. You want to see a market structure shift. Go to your line chart for the untrained eye. You want to see price to the right, close above this little short term high right here. You want to see a body close, not no little wick. And then you waiting for price to start breaking back down, coming down through those gap areas. That's where you want to get your entry at. So you want to see that whole process happen again. So say we got our stop run, market structure shift right here. And then on this leg right here, let it leave a gap. You waiting for it to come back down. As soon as it tap into that gap, you get your entry. Look left to get right where the money at, and then you just you taking it on up higher. Here, where the gap's at. You want to take it on up higher. Trust the setup. You're doing it for a good cause. Let me speed it up just a little bit. See it, patient. Look at that. Look at that. You gotta be patient. See how we was at just a little bit of drawdown.
Mhm.
You know where did price go though? Took out that little high that the high that you was talking about, 41.32. Where the money at? Price is driven to those areas. So boom, TP1 got hit. You could have took one of your one contract off, sell back your position. Boom, you secured $425. Okay, you still got four contracts on the board. See if you can go break even.
Tell you that bitch don't like that level right now.
But you got to be patient. Trust the setup.
Yeah.
They often buyers and sellers are coming in the market. That's what you want to see. That's healthy price action. Let me speed it up just a little bit. See, look, you already paid yourself on a trade, and then you go break even. You got nothing to worry about. You done made money on this trade. Everything now is just a bonus. And then so it's like, what's this above this high now? The price is at a discount. It should go. Price should go to a higher premium, to a higher price. Let's say if you shoot through it, see how prices going. Let me pause right here. See how prices is going sideways. They offering buyers and sellers into the market. That's what you want to see. But you see these highs that they leaving. You know what says above those? At prices at a discount, it should start attacking these highs to our left. All these people over here, they winning. You get what I'm saying? They winning. They winning. So big money. They wipe the board. They sell them down just to buy it back up. Just trapping people, shaking them out. So it's like they say, they saying if they spending, they're gonna spit in your face. Take your liquidity. They're gonna buy the most biggest house they can find somewhere. So it's like they just taking out these highs. See if it shoot through that high. So everything now is a bonus. That's a nice leg right there. If you satisfied with that, I would have been closed out. I'm good with that. I ain't gonna get too greedy. On to the next setup. So so say we caught this discount buy right here. Now I'm waiting for the sale. I'm waiting for price to go to a higher premium, and I'm looking for the same thing. I'm looking to take it down to a cheaper price. And look at that, shoot right through it. You see that?
Mm-hmm.
They let these people win, and then they just take it all away. That's how price is really moving. But you got to keep in mind, we on the 1 minute now. Sniper entry is down here. See that? We way down here. What we got to worry about?
Nothing.
Nothing. We good. So you just looking left. We done took all this back. That's a 5 to 1. You gain 5% on your account. And you got to keep in mind, we on the 1 minute. We still got higher targets. But what if price don't get our way up to here? That's a 10 to 1. What if it don't? So it's like you got to secure this as it's going. You got to know how to manage it. That's key. That's key. Don't let it come back down. Don't let it come all the way back down like this, and you seeing this number go down, you losing it. You know, you got to know how to manage it.
Mm-hmm.
So let's say we closed it out right here. We satisfied. Boom. We ain't gonna get too greedy. Ain't nothing wrong with that.
No.
You don't look 3,000.
Yeah.
Ain't nothing wrong with that. It hit most of your. Let me pause it right here. It hit most of your targets. This high right here. Took out this high, filling these two gaps right here. We ran out this high right here. You see how we have all these targets? It doesn't necessarily have to go get it or right away. Eventually, it's gonna come take all these back. But you see how it took out half of the board right here. It did come back down to entry. So price is still at a discount. You know, it should go to a higher premium. But if it doesn't, you know, you want to see this whole process right here happening again on the stop run market structure gap you play. You want to see that happen again if you was to lose this trade. So it's like where the money at? Money is above that high. So you could take all these off, and once price start running out these highs, they done already swept that. Took these people money. You could take that off the board now. Now what areas and prices still open? Here, here, and this little gap right here. Look at that. We just got filled right here. See that? It came all the way back down to our entry to a discount. What did it do? Went back up to a premium. Took out these equal highs right here, and you look over to your left. We tapped into this gap right here. So you can take that off now. Boom. So that area, they offer buyers into that little red candlestick right there, and then you just you know now you trying to see if you can hit your other targets. If price gonna get up there, try to speed this up. Let's see what happens. But these are some very explosive, trades. Like, yeah,
Bro, I'm telling you, bro. One move, bro. I'm talking about $200 be 5 grand type shit every day. Like, like they don't understand, man. Real, bro. I'm talking about, I be fumbling like I make good money, but I'm talking about just the money that I fumble. Like getting out early. I supposed to make about 300 bands already in this March. May. I said March. But man, I'm
oh
telling
yeah, hey, it's coming. Hey, it's coming.
you, bro.
You're doing it right. Yeah, it's coming. Just gonna take some. Just take time.
Yeah.
You on your way. You're doing it right. You're taking the risk, but you see it like it's
Yeah.
like if you miss this entry, it gave you another opportunity to ride the wave, and you see it
And
shut
like
on.
I said, that's a 1 minute chart. So in the 8 hour span, it's like 3 to 4 good, powerful setups present itself in between 8 and 3 o'clock. You know what I'm saying?
Yeah.
So
Uh huh.
that, bro, that shit, it be crazy, bro. And I'm talking about like when it start moving, that shit pay, like pay.
But
Like contracts go from $300 to $1,700 in 5 minutes. You like, damn.
oh yeah. But you see it like all these setups, just sell because price is expensive. It got down to a discount. We're looking for a buy setup on a smaller time frame. We took it up higher. We looking left to get right. It's like we predicted in the future. You know what I'm saying? Take all this liquidity back. Price got to a premium. We're looking for a sell setup on a smaller time frame. You want to do surgery, cycle through your time frames. What I was talking about with that stop around market structure shift, gap you play. That's the same setup. Entry was on, I think it was the 1 minute. Take it down to a cheaper price. Look left where the money is. What areas and price need to get filled in? Those areas, those gaps right there was on the 30 minute to the 1 hour over here to our left. Filled all that in. Okay, price is cheap now. It should go to a higher premium. And you see it's going back up, taking all this back. Yeah, price as a store. So yeah, so it's like you want to follow it. Price went all the way up, ran out this high, and this high on the smaller time. Took all that back. Them highs that we had on the what was that? The 5 minute. Yeah, ran out all these highs right here. Let's see, zero. See how that it was that high. Take that high off. So we ran out, all these highs right here. That little green counter right there did it. So you see where we came from? We came from a discount market. Price went all the way up to a what? To a premium market. So you want to draw your field from that low, that swing low, from the wick from the bottom, all the way up to a price that stopped at, and that's where you want to stop at. So this that whole, we was buying below here, but once price start breaking above that 50% line, now price you got to start thinking in your mind, okay, price is getting expensive now. I'm not looking for buys no more. I'm looking for sales now. You get what I'm saying? That's how you need to start thinking. That's how you got to think with that. So once you see that, now you zooming in on that area up there on the smaller time frame. You're trying to see where can you get in up here, and you got to find it. You got to find the entry, whichever time frame is the cleanest with that stop run. That manipulation. You got to find it.
Alright.
You got to find it. You got to do some search. You might have to go to school. Go back to go to college.
So now this more of like Thursday, Friday, the end of the day type of stuff. This the last of what's on the chart right now. So like whatever we chart right now, it'll damn near prepare me for Monday.
Yeah. Uh huh. Yep.
Okay. So I'm
I was
good.
just showing you all. What all happened.
So basically we finna like that was a little bit from the past, but like now we finna scoot over and we'll be able to find like I get what you're saying. Like you had to find it. Like so
Yeah,
that
you
would
gotta
be
find it. What'd you say?
now I was saying this right here at the top, like we could draw a high, that would be where our money at, right? And then we'll have to
Yeah, like this right here.
right.
Then these three. That's like one whole candlestick. Like you see, like this one right here. You see this green candlestick right here?
Yeah, there's like
That's one whole solid. Is that's they're breaking in pieces because it's the 1 minute. But that's the same thing. That's one whole candlestick. It ran above these highs right here. Let me take this and this line all the way over here to the left. If I go all the way to the left, that little weak right there, that green candle ran above it. So now you want to see a market structure shift. You know, so price you want to see price to the right.
okay. So now I see what you say by the small gap, not the like the small break, like not the big one. So it'll be basically, damn, you can't see where I'm pointing at, but okay, from the right there, come over a little bit more, right there. That'll be it, right?
Yep.
Okay.
It would have been this one right here, but it didn't. It didn't. Price didn't break all the way down, and then break below it. It made like a how it be like higher high, higher low, higher high, higher low right here, and then it made a lower high, and then it broke right here. It broke right here to the right. This little short term low. So this is this one right here that you was saying. It's that one right here. This one broke the low to the right. That was our short term low. And then you got to exercise the price leave a gap. Not if you good at looking at the smaller time frames like that. Let me take this out. This left a gap right here on that red candle. It was real small. Now all gaps they don't have to be big like that, but once we get that structure break, price has to leave a gap, because that's where we get our entries at on those areas where price on those one-sided markets. So as soon as they offer buyers into this candlestick, now you want to get your entry. Your stop loss right above this green candle right here, because it's the counter that stopped the people out. That whole green candle right here. It's that counter that stopped those people out to our left. That's manipulation. That's the first step. The second step, you want to see that market structure shift. Boom. Okay, we got it right here. Price to the right, close below this little short term low. Price to the right, close below that short term low. You want to see the body close. You want to see the body close. See how solid that is? It closed below that low.
Instantly, yeah.
That's the straight. That's how I look at a market structure shift. You want to see the body close, not no little wick. You don't want to see no little wick just go down like this, and that's not uh, real price action. So you want to see the body close below it. And then the third step, you got to ask yourself, did price leave a gap? It left one right here. So when it come back to retest it, you get your entry right here. You can play anywhere in this blue area, but your protective stop loss has to be above the manipulation candle. So let's see, do they offer? So boom, as soon as they offer buyers into that candlestick, now you can play. We get our entries on those one-sided markets. As soon as they offer buyers into that candlestick, now you can play
So that's
entry right here.
technically like you entering on a pullback of your direction.
Yeah,
Just
but on that gap
right,
candle,
right.
yeah,
Okay, okay. Cause that matter, bro, for real. Like you can, like somebody could have that same entry on that same candle, but you bought the pullback and they bought the bottom of that candle or the open.
yeah, yeah, yeah. So if you think prices in a premium, like look at that, see how we zoomed all the way out like that. This where we came from. This is where all the bulk of the buying started. Way down here, these lows right here, and you see how high prices making higher highs, higher lows. You see where we came from. You see where we at now. Would you buy up here?
No.
That's what uh, the 90% of traders did when they woke up late. They bought up here. They missed the whole move. They didn't wake up on time. So it's like a bunch of trap money sitting up here at this high. So it's like, where the money at? You gotta ask yourself, where the money at? Once you figure out where you at on the chart, that's key. Now you gotta ask yourself where the money is. So you just mark up these lows for the people that's winning these trades to the other side. So when big money they get satisfied, taking profit, they're gonna take the trade the other way. And then what gaps do you see? You gotta get used to marking those up. And then those are your, targets. Take profit areas too. All you need is a 2 to 1. Gain 2% on your account each day if you can find a good setup. But trading in this way, these moves are very explosive. So we're risking, $15 to gain. We can say 50. That's a good risk to reward. Uh, that's a 3 to 1. That's a good risk to reward. And then you trust the setup. The prices in a premium, it should go down to a discount price. But if it doesn't, like if price just started, making higher highs and higher lows, all price is doing, if you was to lose this trade, it's going up to a higher premium. Price is getting even more expensive. So I look at it as you're gonna get a more precise sniper entry than you did that first time right here. That's a price keep going higher. But you want to see this whole thing. You want to see this happen again. So, a run on stocks, market structure shift, and on this leg right here, you gotta ask yourself, did price leave a gap? When it come back to it for that retest in that blue area, now you want to play. Put your stop loss right above the counter that start the people out, and then you're gonna take it down lower to a deeper discount where the money at, where areas and pricing need to get filled in. So it's like you want to target it. It's the same setup. It's never gonna change. You just gotta trust it. Like if you see it coming back up like this, you gotta trust it. You know where you at on the chart. If you was to lose this trade, okay, on to the next one. We know where we at. All it's gonna do is go to a higher premium. You want to see it breaking down again. You get what I'm saying? Like you see how it came all the way back up, and then look at it. They yanking it down. You see that? You gotta trust it. You know where you at on the chart. The 90% they don't. And look at that. We're not risking that much money. $15. What is that? What is that to you? 15. That's nothing. And we up 1,500. We're not risking that much. So you was to lose this trade, okay? That ain't nothing. and then you just managing as it's going. That's a nice little leg right there. You gotta know how to manage it. You see how prices going? They're offering sellers and buyers, trapping people. Then it's gonna pull in one direction very aggressively. See that, and then it just yank down.
Yeah.
Look at that. We can't move price like that. You get what I'm saying? We can't do that. So that's that proof that big money got behind the move right there.
Yeah.
That's that proof.
Appreciate it.
Let
Let me know,
me
gang.
show you. Let me show you this. You see this eye right here?
Yeah.
This how your eye is right now. Cause we training. But once you start seeing this over and over, you know, repeatedly,
Yeah.
your eye gonna start getting bigger and bigger. You're gonna start losing sleep, and then you're gonna start losing a lot of sleep, and you're gonna be wondering, you might have to wear uh, what they call it. You might have to start wearing contacts after a while. Being exposed to this kind of information,
For real.
but you're gonna start losing a lot of sleep. You gonna be